Let's get to Argent Capital Management Portfolio Manager Jed Ellerbroek, and he manages $4 billion. And Jed, excuse me, it is so interesting. I got to pick up on what Madison was just reporting, that these malls are cool again with this younger generation. I realize that this is not what you're looking at, but do you think that we're seeing a shift in consumer behavior just in general?
Yeah, I think consumer behavior is always evolving, and just comparing myself to my parents, the next generation is always eager to do something a little bit different than their parents did. So I buy the story, and I find it very interesting.
Yeah, very interesting. So you are looking at a lot of these big names coming up: Walmart, Depot, TJX. Walmart really is going to give us the window into the consumer. If the high-end consumer is still going to Walmart to buy groceries, that is going to be another headline. And then again, with how they're incorporating AI into their operations, what are you looking for?
Yeah, Walmart continues to benefit from consumer trade down, number one. They're growing their same-store sales and taking market share from companies like Target. They're also benefiting from greater convenience in their offering. The buy online, pick up in store continues to improve and get customers to come into Walmart Plus. And then, yeah, you're right. Improved convenience and selection through their AI-enabled offerings in Sparky. So yeah, good to see Walmart. I expect mid-single-digit same-store sales reported next week.
Are you worried about high gas prices eating into profits at these companies?
Yeah, I think one of the things that today's retail sales report showed was that there is some substitution movement and spending toward gas from other stuff. So that'll be a key watch item and discussion for their earnings call.
All right, so let's move on to Nvidia. This is one of your top picks. Obviously the valuation on this company continues to skyrocket. Jensen Huang, a lot of news breaking. He's with President Trump right now. I wanted to get your take on that in particular, because look, they want to sell the H200 to the Chinese. We don't know if the Chinese will buy the H200 chips. Is this still a top pick for you, and why?
Yeah, I think investors are kind of rolling their eyes over the will Nvidia get to sell their chips to Chinese customers debate. That's been going on for about a year with zero progress at all. So skeptical until the shipments actually begin out here in St. Louis. But Nvidia reports their earnings next Wednesday. I think we're going to see exceptionally strong results. I think we're going to see really impressive guidance for next quarter. The semiconductor industry has had one of the best months in its history over the last 4 weeks, but Nvidia hasn't participated fully in that increase. It's actually one of the smallest increases measured year to date amongst semiconductor stocks. And I think we're going to start to see that reverse. It's already started actually here this week. I think Nvidia has been one of the better performing semiconductor stocks this week, and I think we'll probably see that continue.
Okay. So again, yeah, you're right. Earnings are coming up next week. Let's talk about Apollo. It's one of your picks, but they've had some pressure and they've kind of been lumped into the private credit concerns.
Yeah, you're right. Alternative investment managers across the board have seen their stocks decline over the last few months as investors were concerned, number one, about both lending and equity exposure to software businesses and other companies that might be disrupted by AI, and also whether investors, who bought, private credit products through high net worth advisors knew exactly what they were getting into. And Apollo has sidestepped, I think, both of those issues. They have very little exposure to software businesses, and almost all of their flows into credit products come from insurance and institutional investors. So I think those concerns that apply to the industry do not affect Apollo to the extent that they affect other companies. And I think what really is exciting about Apollo is the big fundraising cycle that they're about to embark on over the next 2 years across several of their big vehicle types.
Yeah, that's interesting. Well, and maybe that message just needs to get out there better. Maybe the company needs to message that just a little bit better. To your point, you like United Rentals. I want to get into this one with you because, they had earnings for the first quarter. Stock did well. Is Wall Street missing something with this company?
Yeah, you're right. The stock has done well over the last couple months. So to some extent, it feels like jumping on the bus after it's already started to move. But I think that this stock can continue to work because the construction equipment cycle is just starting to turn up. And I expect it'll be a multi-year recovery. For the last 2 years, United Rentals and its equipment rental peers haven't been able to increase rental prices to customers because local project activity has been weak. And it's been weak mostly because interest rates rose a couple of years ago. Local activity is starting to rebound, and we see continued really strong mega project demand from all the semiconductor facilities, battery equipment, all that kind of stuff. So I think both of their big end markets are picking up.
Like it. All right, Jed, thank you so much for the picks. Really appreciate it.